Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it's Monday, and it was a relatively quiet day, on Wall Street. It feels like most Mondays have been to the downside. They trigger some stops, they get some of the uncommitted funds out, and then all of a sudden, Tuesday, Wednesdays, things get stronger. Overall, I think there are inside days that feel healthy, and then there are inside days that feel a bit odd. This inside day felt a little bit odd to me. Maybe I was in the wrong stocks, or not. But, if we take a look at the charts to see if anything changed ahead of, Fed Chairman Yellen speaking tomorrow, ahead of, I think tomorrow's the Senate at 10 o'clock. Let's just get right down to the charts. You look at the chart of the SPX to run right through. Here's your little red dog reversal. Switch some gears. Here is when you had some commitment to it, or it broke at least above the 8-day moving average. This is where you held the top third of this range. Okay, so right there, very strategic move from the reversal into a consolidation that now headed for highs. So as far as today is concerned, did it feel a little bit weaker? It did. Some stocks definitely felt a little weaker than stronger, but overall, if you look at what we talked about this morning, it held above that 2102. And nice inside day. Do we get another one? Who knows? Do we get a gap up, which we haven't had in a while? Look how many times we have had this little gap downs, and now maybe they wore everyone out, and tomorrow we gap up. So, I'm very light long, but I'm not short. A lot of people have been, rolling up shorts during this entire trend, and if that's you're not trading with the trend. The trend is above the 8-day. Things seem stronger than weaker, so you try and stay with them. As far as, quick look around, you look at the Qs also. Very strong. This broke the downtrend before. Most sectors, always a good sign. Here's where it held higher, right there, digesting the red dog reversal right here. That could have been your spot if you missed this one, and now it's riding above the 8-day. Definitely doesn't look like a short, but sometimes when you have, 18 up days in a row, you could sell into some strength, but when you do that, sometimes you trim and trail yourself out of good positions, and that's kind of what happened to me, with this Apple. Apple, I guess sometimes, I'm a little off with it. I did the same thing here. I bought a lot of Apple in here, had a nice consolidation. That's when I went back to it, sold into that, and then I missed, this move from 114 to 119 before it broke the 8-day. So here, very similar, got back involved in Apple after earnings in here, had a nice add above this 120.51. Sold it before leaving on my vacation into this move somewhere around 123.5. Still the call spread. That's, you can't make any more money on it because I bought the 120, sold the 125s. But anyway, this is, the additional move here after letting the 8-day catch up. I think, short-term traders, if you're trying to fade this thing, and you're looking, you're saying you can't go up anymore. I think a lot of guys lost money trying to short Apple today. Just because it's hard to buy something after a big move, it does not mean it's a short, okay? Write that down. If you find yourself in every pain trade out there because you think something can't go up anymore or something can't go down anymore, stop it. That's actually what the red dog reversal is for. At least, if it pushes through an area, comes back below, you could short versus a high, and it's calculated versus just short, 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 until finally it stretches you out to kazoots and puts you out of business or ruins your next few months. And at this particular point, I also know some guys that, sold into here. So, they start to get upset that they sold it, so they start shorting it here, and they're getting blown out of the water. So for me, I haven't traded Apple since this day. And, we'll see what happens. Maybe tomorrow we can catch something on the cute side. But it's been very, very strong. And usually the hard trade's the right trade, and the hard trade during this process is to be long. But again, if you do things calculated, this is when it was calculated and exciting, and you had 3 days to the upside, that pays the bills. You're not always going to get the leftover part of the move. So with that being said, if you're still in it and you're an investor in Apple, you've been investing for gazillions of years, congratulations. You've probably made a lot of money. I try and strategically be long at times, ride trends, and most of the time I'm bullish on it, and I think a lot of people have made a lot of money with that. Elsewhere in other stocks, you look at Facebook, still held, this what's it called, 78.5 that I talked about in Benzinga, went a little bit below, so little work above this. and at some point I do think I could take out this 80 and change. So this would be the level to trade against. It's still, well, it's a little extended from the moving averages, so with a little bit more time, let it prove it could hold, and perhaps we get that next move. Twitter, just an inside day. Yeah, I think some people lose sight that it did come from 38. This is when we bought those options on it, and did have a big move. And even if you charted playing it here, feels like it's not that powerful. But again, from 38 to 48, you could calculate the percentage gains there. So with that said, it's still above the 8-day. It's just an inside day. If you want to try and be a little cute and perfect, you might be left behind. But if that's what you do, that's fine. If you're in it versus this, just let it work itself out. You look at the bigger picture on Twitter here. Some guys we're on Twitter. We're talking about this potential, I guess, downtrend here from this peak into here. I actually think it's above it already. But anyway, with that said, has come a long way, just doesn't have the power. As far as LinkedIn, I posted the chart today. Thought perhaps if the group was strong, it could break above 269, 272. It did not work. So, one of the rules is if you play a stock for a momentum move, you only stay in it if it holds the momentum level. So I did buy it above 269-ish, okay, and once it went back below it, I got out. This actually looks like a little bit of a red dog reversal to the downside. Some people might be shorted. I just think maybe it needs more time. I just went out flat it because, again, it's not proving that it could hold momentum. Still above the earnings gap and still pretty powerful, but at this point, it hasn't been able to sustain the move, so why stay with it if you're an active trader? So we'll see if it happens again, or we'll see if it just has come a really long way, because LinkedIn has come a really long way. So at this particular point, you got to be a bit more careful that this gap stays unfilled, so there's power still there. You look across the board, cyber. Okay, before I get into cyber, I just want to talk about it real quick. This was from my Redler All Access and my 2015 report. And on Friday, we said, do not chase cyber. If you've been in it since before earnings and the report came out, congratulations, sell some. If you're in it after earnings, it was a calculated buy, but you do not chase it. There are actually some guys on the site that were shorted. Congratulations to you. But there's also a lesson that some people thought, oh no, cyber's downgraded. It's down $4. I missed it. It went down 11. So you missed the first $4, and that was actually what ignited the move lower for the day. You look at the chart here, you see how far it came, okay, and lots of different ways to maneuver it, and our job is to maneuver these things. You look here, this is when you had this small igniting bar well before earnings and gave you a move, to the upside, so that could have been really nice for you. Then here was your post-earnings move, big gap. We talk about strategies on if you trade above earnings day high, you go with it, and that gave you a really nice move, and then hopefully you sold the strength. So look at this bar. People who were trying to wait for a short, they were hoping for a gap up to short. You know what? You had a gap down. But if you look at the 5-minute, okay, or you didn't miss much, okay, or maybe even go to the 3. Let's stay with the 5-minute. First bar, came off the lows to get engulfed. This could have been your entry right here once it took out that first bar at 66.28. That's a nice short. Or came down here, tried to bounce off of it, engulfed it. You could have been a short below 63 and still made another $4. So just because you missed this gap down and it didn't give you the setup you wanted from the short side, it doesn't mean you don't trade it if that's what you were looking for. So setup 1, setup 2, and closed all the way down here. So we'll see what happens tomorrow. Tomorrow maybe if it gives you a gap down into the 8-day, perhaps we'll look for some type of long entry. Or maybe if it opens up a little bit, pushes below today's low, and then wants to regroup, okay, but it's come a long way, so we'll see. Entries and exits. Same thing for FireEye. FireEye gave you a nice move after earnings. Okay, today kind of sucked probably for people because it really didn't give you much, this one wasn't as extended. Okay, gave you a nice trade after earnings, went sideways, triggered above this. So if you were long this, you really didn't chase this, even though it did have a big move, especially when you look at the weekly chart. You look at where it was. This is definitely a little bit of a spot, right? You look at to your left to see, actually not right here. You look for this was another resistance, but if you look at the bottom end of this, there was it was a resistance zone, so to speak. So if you took it long, okay. So you never, if something happens out of the blue, and you get side blasted. We talk about if you happen to step on a landmine with a lot of people, the first few people that leave it and lose a finger, or a limb, better than just sitting there and saying, oh, what do I do next? What do I do next? And let's see what the 3-minute chart of FireEye looked like to see if you did go out long this and you came into the cyber downgrade and you're like, oh, what do I do? Here's the 5-minute. So, this one really didn't give you, this one gave you a wide range bar down, another one. And then if I was long this one, what I probably would have done is, after the first 30 minutes, I tried to put a low in here at 44.59, and then once it broke this low, that would have been my stop. At about 44.50, I would have said, okay, I'm out. I'm going to revisit this. 2 big bars, little sideways action, not not blowing it off, and that would have been the out. So then this way, maybe you didn't have to stay in for this whole thing. So now we'll see what happens next. My process doesn't have me buying the first engulfing day. And right here, this day engulfed this day, closed below a prior low. So I'm not in a rush to just buy that because I think at some point this year it could be higher. So I'll wait and I'll see, does it hold this area and do we get a buy signal? Because I'm not involved in it. Last thing I had was, I had options, bought the 35s and sold the 40s, made some money. Actually, got shorted a 40 because I sold too many options on vacation and, anyway, got out of it in this 2-day stretch, which you saw on the VTF. So anyway, we'll see what happens here. And if you did get caught, buying this and closing on the highs, it happens. It's almost like, you double down on 11 versus 6 in blackjack, and you get a 5, and then the dealer turns over a 4 and gets a 10, and you lose the money. It happens. The odds play is you double down versus 6 because chances are you can get a face card and it's a good setup. So that was a decent setup to take home, even though it came a long way because there was definitely some more room. You didn't know that Cyber was getting a downgrade. If you went home long Cyber, then I think you're sticking around a little bit too long and you have to work on taking profits a little bit. The same way I have to probably work on holding things a little bit longer because I definitely get out of things before I could stay around for more profits. But anyway, I came in along the banks also today, and all in all, Morgan looks fine. I just, didn't want to sit in it. It still has a small reversal on the 21-day inside day into Yellen tomorrow. We'll see if Yellen is hawkish. If she's hawkish, maybe you get a move here. All in all, an inside day. Felt a little worse than I guess it looks here. I'll revisit that. Same thing for Bank of America. Just, in broken stocks or broken sectors, and that's what the banks have been, still below the 200-day, still below the moving averages, I tend to be a little less flexible. So on this one, I did get out around 1620-ish, but it did hold here, so we'll see what happens in the next session or so, especially after, Yellen speaks. If, these banks are, their earnings power is not there. They're still laying off people. I think there's another round of layoffs coming across in the next few weeks, and Morgan has a few of these. And one of the few industries that haven't bounced back because of all the regulations. So I think we want to be long these at certain times, but the truth is it's hard for them to make money. They don't have prop trading divisions anymore. It is what it is. I'm not trying to look too far into it, but so that's why I'm trying to be a little bit more perfect on these banks because they're not leading the market. They're just trades here and there. As far as mega cap, Cisco still looks really good. Big gap up. Take a look there. If you're in that one, looks much better than Intel, which looked as if it might try and go in the gap and trade it down today. So I would say out of the 3 mega cap names, Cisco looks best. This looks worst, and Microsoft looks like it's trying to get into the gap, so it's acting a little bit better. IBM, some guys were talking about it. It's trying to get into that gap too. I think this is still broken below all the moving averages. Kind of reminds me of Google that's been broken. We had a decent trade here in Google right there. I remember leaving for vacation. I'm like, I think it trades above this 542-ish area. Got long right around here. And then, here I had a lucky sale. Everyone, my rule, I'm like, I'm going to sell into the 200-day. And it wound up working, But again, after, that was a good sale. But then you look at Apple, and, this sale right here was not a great sale. But if you keep taking trades and you keep positive and you keep moving forward, any profitable trade is a good trade because it leads to more trades, and you just have to work on your exit matrix, whatever it is. Oil, a little bit weaker than you would have than I guess the oil bulls would want. You know, it did close relatively weak. It looks vulnerable here where it closed on the dead lows of the range. So, you know, a down open tomorrow, I think the market notices. We haven't heard about new lows in oil for a while, so psychologically we start heading back down there. Volatility might get a little bit, rise a little. The TLTs actually looked like they're turning up, you know, from here. So if you sold when it broke the 8-day right there, right? It was above the 8-day this entire time, broke trend right here at 136. Perhaps you could test a little bit versus this, but if, again, if Yellen is hawkish, this probably makes you know, lower lows, but at this point, trying to clear this, maybe it tries to rally back a little bit, so see if it could get up to this 129 and does it put in a reversal bar like this one, right around here, so we'll see. I was thinking about getting long and I didn't do it, but you know, this is telling me, you know, if this rallies up, maybe the market is getting a little wishy-washy. Gold also, gold actually looks broken still. Ever since hitting the measured move, it's just gap down, not filled, give us direction, gap down, didn't come close to filling. It's still just not a good trade. You know, you had one calculated trade this year so far, and that was right here. You had your inverse head and shoulders pattern, the left shoulder, the head, the right shoulder, gave you a nice trade above, and the measured move was hit and then some. And since then, it's just been like blah. So don't be caught in the blah. And we'll see what happens. You know, felt like it felt like a weaker day than the indices looked, but sometimes that amounts to something, sometimes nothing. We'll see what happens tomorrow in the next 2 days with Yellen. I do think a lot of people in the minutes were thinking that she would be more dovish. We've had a few more reasons to be a bit more hawkish since, so we'll see what stance she goes in front of Congress. We'll see if any of the senators or whatnot grill her saying that savers can't save or savers aren't getting paid to save, and the only people who are making money is if you're in the stock market, and that might not be the best thing for some people at certain points in their lives. But if you're in the stock market and you have a plan, it's all about knowing your time frame, knowing your risk, knowing your strategic and your process, and just continue to work on it. With that said, I'll see you tomorrow morning with Brittany. Have a good night.